Hi, good afternoon webinar attendees. Welcome to IPVision's webinar on implementing a patent portfolio strategy within energy generation and storage industries. This webinar is in a series of briefings we provide on topics facing technology firms, their experts, and investors. Please contact us directly if you have any questions. There'll be contact information given at the end of the webinar. While the focus of this presentation includes examples from the energy storage and development industries, many of the principles can be generally applied to any technology-based business. I'd like to now introduce the webinar's presenter, Alex Butler. Alex has over 15 years of experience helping organizations implement IT strategies. Alex has worked directly with a range of technology-based companies and their investors to explore building value through IP. Alex is recognized as one of the top 250 IP strategists from Intellectual Asset Management magazine. Now, Alex, I will pass it to you.
Thank you, Joe. As indicated, this conversation is going to draw upon some specific examples of companies, trends, and activities in sort of the broadly defined energy storage space, as well as some of the specific approaches and technologies that firms are developing and attempting to commercialize to address this challenge. Saying that, as Joe indicated, the principles, the process, and the objectives are something that we at IPVision strongly believe are broadly applicable to all technology-oriented businesses and their more broadly defined stakeholders and experts who are working to advance their commercial or investment objectives. So in this conversation, we will not spend much time introducing IPVision, but we've worked with technology-based firms and their stakeholders for more than 10 years, coming from our origins at the Sloan School at MIT and the technology labs here in Cambridge, Massachusetts. From that perspective, we feel that it's important that management and the experts develop a broad understanding of the context that they're working within. So we'll try to address some approaches to understanding that technology landscape, perhaps is one phrase, that you're facing, or multiple technology landscapes if you're in a larger organization and firm. In the energy space, there's a lot of activity at early stage in trying to develop for advanced technology, some of which have been around for many decades. There's a compelling societal and economic need that's driving that activity and investment. Some of that is also driven certainly by government and regulations, but the economics are certainly there. And you're seeing more and more firms, top talent, capital flowing into trying to address these needs, whether it's flow batteries or grid storage. Along that line, I don't think that the trend is going to stop. We'll provide some fairly high-level examples to seed the conversation. A few specifics, particularly with firms that we have no direct ties or experience with, mostly to give some examples of how somebody may look at their own firm or other firms. And we'll close with some recommendations in terms of a process that we see that leading firms go through, either working with IPVision or with others to get more out of their economic investment and time investments in developing these different approaches. So at the beginning, I'll just pose a question. Do we think that we can improve decisions, broadly stated, based upon insights gained from intellectual property? The grand bargain of patents, in terms of statutes and societal benefit, is that innovation is stimulated and fostered in return for publicly disclosing the advances or inventions that you've made. We have found time and time again that, speaking of intellectual property broadly, whether it's trade secrets, know-how, the brands certainly are there, and trademarks, and patents, provide value to organizations. Patents in particular are important for technology-based firms because that provides that exclusive ability to make, use, or sell, or keep others from doing that, which is a competitive advantage. Unfortunately, patents are often relegated to a more of a legal domain or a conversation around merely having them without perhaps taking a few additional steps to think about how the business intelligence opportunities on patents, the planning opportunities, and the ability to shape and carve future value in a market and anticipate that can become possible. So we're going to focus on how you can get there and support not just the legal process or the R&D process, but the broader corporate objectives. Now, the challenge in getting there is that, although we recognize that intellectual property is important, it's also extremely dense. Patents are not something that people like to read, generally speaking, much less when you have a high volume of patenting that's developing around a technology or the stakes start getting higher. So that gives you time constraints. It also gives you economic constraints. Because if I'm reading one document of 50 pages, that's one thing, or just one portion of that document, which may be a 15 or 20-minute read. But then if I start saying there are 100 or 500 or 5,000, it becomes much more difficult. So across most corporate domains, and as MIT Sloan Management Review and IBM's Center for Global Analytics have shown, top performers use analytics 5 times more often than lower performers, and they get superior. So in this case, we're speaking about patent analytics and different types of analytics that can support a range of decision criteria or decision processes in an organization. Getting into the energy storage space in general, I think we're probably grossly understating the trend. This chart demonstrates how we've moved from a situation where there were a few hundred patent filings in the U.S. alone. Certainly, there are corresponding international filings as well per year, even just 2 or 3 decades ago. And then over the last 10 years or so, there's been a very remarkable trajectory upwards and increasing in this. So this is more than just a trend that you see in terms of overall patenting that is also on the rise. But you're seeing sort of an outsized growth in this industry. I think that's indicative of the investment and the future value that people see. So if you think about it, just one research report that I read from Pike Research, which is part of Navigant, they're forecasting that energy storage could be likely a $30 billion a year annual market value in about 10 years or so from today. So that's on grid energy storage as one aspect of it. When you think about the opportunities presented with peak shaving or load controls, and movement towards electronic vehicles and fuel cells and the like, there certainly is a lot of activity that's sort of speeding up or accelerating, which is I think in line or correlates with the patenting activity shown in this chart, which certainly is narrower than some of the examples I just listed. In addition to that annual value or potential value that's been forecasted by many firms and analysts, you can also just think about the changing cost paradigms in terms of what it takes to produce energy, electricity, for example, in kilowatt hours, or just the capital investment required to build a new plant. So if you can avoid building a new power plant, whether it's a coal-fired plant at maybe $1 billion or a nuclear plant at greater than $10 billion, there certainly is a you're avoiding some of the regulatory issues, you're avoiding the expense, the time constraints, and you certainly are also just projections that sometimes come into play. So, as the headlines indicate, it's not always easy. Technology firms come, technology firms go. Some succeed. So, how do you actually shape and steer the value? And as a manager or as an investor, how do you evaluate how a firm is doing in its efforts to do that? And that can be for your own firm or someone else's if you're looking at suppliers. Are we actually maximizing long-term enterprise value? That can be on a commercial success, certainly you want to be where the value will be in future years, not just where the value may be today. So think about a value chain-driven approach. Also want to look at reducing risk, particularly patent risk. It's often fairly low early in the technology development cycle for an industry, but as the technology matures and more entrants and larger entrants enter, and as the value of the market grows, patent risk also dramatically increases. So the mobile phone industry is facing this today. Social media is likely facing it. Medical technology devices are facing it. I would certainly suspect that industries such as this, where you have large potential margins and large potential revenues and value, are going with a lot of complexity between competing solutions and legacy technology that has been improved over time. For example, flow batteries is an example we'll touch upon in a minute. Patent litigation will likely be something that is, should be at the front line sooner rather than later. On the flip side, you can also see residual value in a patent portfolio. So if you have a firm that has developed a good, well-positioned, strong portfolio, even though they may have run into commercialization or funding challenges, that residual value in their IP can be very important as something that the firm may maintain or provide back to its creditors or to future alternative approaches to returning value from the R&D investment that has been made. Just a couple examples of that would be some of the press reports that are looking at international patent acquisition or licensing activity around solar patents or battery patents for firms that have ran into commercialization challenges recently. We've mentioned this value chain approach to IP strategy. So if you often think about IP strategy, historically it was the patent strategy, or more broadly speaking, other forms of intellectual property, encompassing intellectual capital and trade secrets and disclosure and things like that. Very important. But in terms of patent strategy, firms will often focus upon defensive or offensive patenting around their engineering or their products. So we need to preserve our freedom to operate is often the phrase that you hear traditionally and still maintains extreme importance today. A more sophisticated approach that I think integrates IP and patents with the corporate strategic thinking and process and planning and tactical exercises is to think about your value chain. So you can have a very simplistic view, just 4 quadrants here, or you could actually get very detailed analyses, such as we've worked with our clients on, to say, what are the specific materials or components that you rely upon your suppliers for? What are the specific ways that you integrate those into actual devices and apparatuses? What are the methods of use, or the systems of controlling those things? How do you distribute the output of this, or what are the actual end uses or different markets and applications? So as you start thinking about your technology platforms and your R&D and where it fits in the value chain, think about it in terms of where are the end uses and what are you relying upon, and then how can you use intellectual property and the analytics to support generating a broader and larger share of value, so you're not feeding that to current or future competitors or suppliers who are all looking at trying to do essentially the same thing. So broadly focused, think about that broader enterprise value, which will in turn eventually lead into hopefully share price or valuation of increased valuation of the firm. Supply chain maintenance, thinking about that sustained competitive advantage. And probably the most important thing is the 4th point here, where we're talking about thinking about where your market value, the value in your markets will be in future years. So not just 2, 3 years out, but 5, 10 plus years out, because that's what patents are designed for. If you are able to capture that value, you'll have a couple decades that you will be able to extract returns from that patent investment on. So if you're going to sign up for potential 2-year return horizon, you also want to be able to think about, what that value will be rather than just thinking about today's market when you're designing your patenting programs. So here's a specific example looking at flow batteries. This is a technology that's been around for a long time. We'll actually point to an example in a few minutes that actually builds out from something that was originally developed in the 1970s at NASA. This is just a quick view of patent filings within the last 10 years, and you can see a near tenfold increase in the annual patenting in the U.S. alone. These are patent filings, not patent issuances. This is the core group. There certainly are more activities around this and more firms around this. And you can see who the patent holders are tied to this. And you'll see a big chunk that said no assignee or assigned. Those are essentially things that have not had publicly declared title transactions. But we can map out and think generally who owns those. But you can see there's a range of firms here. And it's kind of interesting because you'll see that there are larger research-driven and technology-driven firms. You have some very focused pure-play firms, and we'll dive into an example or two of those. And you also have some research institutions such as Battelle. And as you work your way down beyond this chart's top 10, top 15 holdings, you'll see a few universities in the mix as well. So what will likely happen is, as the pure plays and larger firms and other entrants get into this, if flow batteries actually do work out as forecasted, or by many in the industry, you'll see the patenting will continue to increase, and the size and complexity and sophistication of the issues facing these companies and firms, and the number of players holding patents is also going to continue to expand quite dramatically. And again, this is just on the U.S. Certainly we can expand this analysis internationally as well. A more sophisticated view than the traditional, let's see who owns patents and how many they own, and have stacks of patents that we can sort of position around the table and think about sort of the typical topographical map view. Let's actually start thinking about the time-based relationship analysis or mapping. So in this case, we just took 3 firms. One was an earlier firm, the second point, and then we said, well, let's look at DI Energy, which is a VC-backed firm based in Silicon Valley, primarily operating in India as its market, and throughout Asia. So you have some sort of those original patents building out from green colored patents to the boxes with blue covers to those with red, and a few others. And then we can start mapping other additional value perspectives on this. This is one form of an analytic. It's a visualization that oftentimes is used by engineering or executive teams and even legal teams to start trying to understand the timing or sequencing of technology development in the industry or between firms, or the movement of IP and knowledge between one firm and another across an industry. So the left-hand side of the x-axis would be earlier in time, moving to the most current activity on the right, a bunch of vertical columns that are maybe difficult to see on the webinar. The left edge of the blue lines trailing off of these boxes is actually just the date that the patent application was filed. And then these boxes that you see are patent issuances or patent applications that have published. I think these have all actually been issued patents. And then there's additional information that would be available by drilling down underneath this to explore specific attributes. And then you might overlay this with timing of when investments have been made in a firm, qualitative reviews in terms of patent claims, breadth and quality. They're getting good patent claims from their representation and the like. And we'll get into some other examples of that in the future. So we've identified building out from sort of the broader universe of firms active in the technology area. So let's look at their portfolio a little bit more closely. So now we can actually see their portfolio. There are a few interesting things here. They have a couple rounds of investment by NEA, Draper Fisher, and others. They're, as I mentioned, they're in the Valley, working in India. And you can see that they have some patents that go back, in this case, back into the 2006-2007 time frame, which is just a couple of years after their founding. They probably have other patents in their portfolio. This is a subset that we've pulled out because it has a very concentrated area of patenting, and they've created a bit of a thicket there. One of the interesting things here is you'll see that there is a tremendous amount or percentage of the filings that were made on the almost exactly the same date in the 2009 timeframe, late 2009, and many of those have now matured to issuance. Start thinking about so analyzing the firm, you say, well, what's their technology? Flow batteries. What's the application? They have two primary applications that they're looking at: small scale and large, or basically grid scale energy storage. And then looking at what are the end markets and customers that they're looking at. So banking, telecommunications, transit, things along this line. So it can be powering a mobile telephone tower or an antenna array. It could be powering a base station. It could be powering a transit facility or switch. It could be provide shipping container size grid storage to provide backup power or to help with some of these load leveling needs that are faced within a space. So that may be their target value or their accessible value, and some of the things they may be relying upon would be base materials and components to controlling systems to make this all work, and making sure they have access to that supply, and their suppliers also have the ability to give them that supply and not have their own risk of patent infringement, so it's not interrupted. But they say, well, what's the value that's actually protected by a company's portfolio? So I'm not going to get into DIA's specific patent holdings, but the question is, oftentimes what you'll see in a technology-based firm, there's so much focus on patenting what the inventors or the engineers have invented or innovated. And the question is, have you actually captured the value question and thought about how, your technology will fit into specific applications or markets and to different customers and uses? So if you can think about ways to capture that longer term, larger value in your patent portfolio, that's going to give you some commercial advantage that's sustainable over time. Again, oftentimes what you'll see is that probably a majority of times, technology firms underappreciate the need to think about that value and where it's going to be in the next few years. So that's just an example of looking at flow batteries, looking at DIA and a couple of firms that were around them in the space. You should also think about what's happening as alternatives that are being looked at for energy storage. You have things like compressed solar energy storage is being done. You have wind storage, in terms of needs. You have flywheels that have been attempted and continue to be patented, and people trying to evolve those. So you can think about, those applications, wind, solar, and the like. You can think about, methods, flywheels and compressed air, just being a couple to segment the two. The interesting thing that you see is that, with varying degrees, some driven by government incentives, some of them driven by pure economics. The level of activity continues to increase in each of these areas. So as you compile them across the universe of information to try to analyze where the analytics start coming in. So if I'm looking at, let's say, looking at wind or solar storage, to look at a couple different discrete examples, you may want to say there are 5 or 6 firms that we're looking at as suppliers for one of our components, or that we're looking at suppliers or partners in. So we gather their patent portfolios and say, well, I could certainly go in and say, well, each of them have 10 to 20 or 40 to 100 patents and patent applications in the U.S. and abroad in terms of patent filings, and that they've developed. Some are issued, some are pending. It's a fairly simplistic, and I think, again, as we've talked about, an inferior approach, although the one that was probably most accessible in time over the last few years. Now with the analytics, you can start saying we can apply calibrated metrics across the portfolio at a point in time, and then keep those updated based upon evidence-based perspectives. So we're looking at trying to understand what's the relative position of these firms, what's the overall strength and quality of the portfolio. So you may have a smaller portfolio that is a very smartly, well-crafted, honed, and strategically oriented portfolio that has more value than a larger portfolio. So this is just an example where you can actually take those different perspectives and work with them to compare and contrast and say, well, now we have a guide or a roadmap of how to evaluate my firm and other firms on a comparables basis. One of the interesting things that you'll find is that that comparison becomes a very good way to think about how to communicate across silos or different perspectives in an organization. So R&D and engineering, product development and commercializations, corporate strategy, finance, executive management, the board of directors. It's a good way to say, are we getting good returns? Are we developing something that has lasting value and impact? So let's think about a recommended path forward or how you might approach this. Again, this is something that we approach with many of our clients and recommend that you follow, whether it's with us or someone else. But think about an iterative approach. So what's your broadly defined technology landscape? Energy storage. What's a narrowly defined technology area that you focus on? Flow batteries or compressed air, for two examples. Well, let's look at focused portfolio reviews and do a deep dive with qualitative and understanding that build upon perspectives of how things are evolving and building out over time and what those companies actually are gaining or developing. And then that allows you to compare and contrast multiple portfolios. So think about it in terms of, again, that's structured process to evaluate a company, its competitors, its supply chain, its end markets, looking at narrowly defined technologies that it relies upon, and more broadly defined markets. And you can start segmenting those quite easily. And then feed each of those analyses or results into a range of your decision processes. So it's not just supporting one effort. This can become a platform that can help align corporate-wide thinking and communications. And then the other piece is that over time, building that IP portfolio or effective IP management certainly can support success of the broader enterprise or the investment in the enterprise. So just to pull one example of this, a colleague of mine, Joe Zima, who's many years was a practicing attorney, is now also on the senior faculty at the Sloan School at MIT. And I wrote a paper that reanalyzed several hundred firms out of nearly 10,000 firm population or patent portfolio population, and looked at them basically from the standpoint of, is there a correlation, again, not causation, a correlation between strong, well-positioned IP portfolios or patent portfolios and successful exits from venture capital firms. Excuse me. So we looked at several top quartile venture capital funds. And of those, we found that even in the best of the best, you'd see in some industries 6 times more likely if you were in the top quartile of our analytics ratings in terms of strength, quality, and position, and evolution of sort of a strategic portfolio over time, you were more likely to be a winner of that fund and a loser. So if you ask most principals in a corporate venture or private venture capital fund, you hear the anecdotes of 10 are successful. Now, there are some timing issues here, but certainly there is something to be said, I think, for building out that IP portfolio. The other thing is, I think, that if you are good at building out your IP portfolio and you follow these structured processes and you're thinking about the value chain that you are operating in, both narrowly and broadly defined, you're doing, hopefully, other good things in your business, or that process is supporting your business in doing other good things, from commercialization planning, products, testing and development, marketing, financial controls, along that line. So, if you're looking at IP of your own firm and other firms, or firms that you have investments and are relying upon as suppliers, think of this as often also a proxy potentially for how the management is doing over time. So the structured process that we recommend and we find that winning or successful firms follow, they're thinking about this value chain approach more discreetly. There's 5 steps here. You can certainly make it more sophisticated. But first, you need to understand your own portfolio. What's the quality? What's the position of my portfolio? Who's in my neighborhood, to use a real estate analogy? What rights might I need to or want to supplement my portfolio through acquisition or organic growth? Where do I want to take my portfolio now that I know the industry that I'm in? So what are other firms doing? So even though the patents may not be an infringement risk, understanding my suppliers, my competitors, and alternative approaches to my more broadly defined space can be immensely valuable from a business intelligence standpoint or from a supplier selection and sort of the broader value creation concept. Now, assess the core technologies that you really fundamentally rely upon. This is your risk management. Do I have what I need, and can I maintain advantage of what I need? Or do I want to take a different approach where I'm actually enabling a broader market by supplying technology or through disclosures to make sure that, while I may not have exclusive rights, I'm enabling a larger market or a larger application usage of technology. And then, who are those core patent holders? Think about their portfolios. Much as you understand your own, you may not need to be quite as detailed at all levels, but as you map out the dozens or hundreds of firms that own patents in your space, find out what they have, characterize that from a quantity, quality, position, and strength perspective, and then as appropriate for different firms, you may want to and you should, I recommend putting an update and review process around those. And generally you should do that certainly on a scheduled basis, otherwise you find things get out of date very quickly. Depending upon where you are in the industry and what you're trying to accomplish, you find that generally people will find a quarterly update or just maybe a light to moderate refresh of a deep dive or initial understanding, and then doing an annual deep dive and working session review, internally or with their experts, whether they're technical experts, strategy experts, or they're outside counsel or inside counsel, can be an extremely valuable process to inform the corporate calendar and decision-making process. So with that, we'll leave you with the general thought that we think that's important to start moving away from the we think or we realize that it's important to actually utilizing evidence-based approaches to this. Certainly feel free to contact myself or anyone at IPVision if we can provide additional assistance or answer any questions on this topic. Thank you.